ALP, your secure and reliable path to profit. Part 2. There are other regular expenses such as taxes and insurance. Normally, what we take into calculation is the PITI, principal, interest, taxes, and insurance. So the monthly credit is calculated by adding the PITI and the additional rent. We work with the tenant with a boosted saving plan, which they call full saving under the normal rent to own. I don't like the term false saving, so we call it the boosted saving. The reason for that is false saving implies that they're forcing the tenant to pay extra each month. In contrast, in the ALP system, we encourage the tenant buyer to save extra because the more they put down as additional rent, the more credit they are going to get. This helps the tenant buyer because they can generally see the system helping them speed up the accumulation of their deposits. Let's say the total cost of PITI is $1,600, for example. We suppose the tenant buyer is buying the house for $1,000 with the added appreciation after 3 years. It's going to be $330,000 or $340,000. If the client is paying $16,500 as the deposit, let's say they will qualify with the lender at 5%, and the banks might require them to put 10% down because of COVID. So they might require another $16,500. The way it's done is that the balance $16,500 is divided into 36 months. Let's say it's 3 years. So they will need roughly $406 a month as additional rent. It becomes very hard for the tenant to afford the additional rent, but if we subsidize that saving by giving them an incentive, let's say they need to save $406 and we give them another $100 for that, they will happily do that. We have seen our tenants paying us $1,000 or $1,500 extra because it helps boost their savings and cuts short the period of the rent-to-own period. It helps them save. Any serious buyer, if they have the cash flow and if they have the resources, will definitely go ahead with this boosted saving plan instead of the false saving, which is normally applied in the normal lease options or rent-to-own agreements. In a normal rent-to-own or lease option, there's a full saving, which is around $200, and there's no bonus. Normally, they force the tenant buyer to pay the extra $200 or $300 each month so that they can force them to save enough down payment. What we have experienced is that false saving doesn't work. The way we do it is very simple. We do what we call this boosted saving program. The boosted saving program works is the more the tenant pays us as additional rent, the more bonus we are going to give them. For example, let's say the tenants pay above $300. They will get another 30% on that $300 as a bonus for paying the $300 as additional rent. So let's say, for example, the tenant pays $500. They will get 30% of it, which would be $50. So the total savings for the tenant will be $650. Nowhere else can they get a 30% return on their money. So any smart tenant, any smart buyer will happily do that. If they pay over $600, it will be 35%. If they pay over $900, it will be 40%. And if they pay, let's say, over $1,200, it will be 45%. So this boosted saving helps the tenant save more money. So let's say the tenant maximizes and pays for an extra $1,400. They will be receiving another $630. So they will be each month saving $2,000. Okay, yes, you may think that it cuts into your profits, but our goal at the end of the day, when we started this program, was to make sure that we are helping others. Don't worry about your profits at this moment. Once we do the full calculations, you will notice that this is one of the most profitable deals not only for you, but also for the tenant buyer. And it's fair that both of you will win big by doing this way. This gives the tenant buyer an added incentive to give you more additional rent. The beauty is, with this now, because you're receiving a lot of extra rent from the tenant, it helps with your qualification for your mortgages because you have more income coming, more cash flow coming, and it helps with your cash flow as well and helps you purchase more properties. So overall, you win and they win. You now have a good cash flow because you're receiving, let's say, $16 or $18 plus an extra $300 or $400, and in some cases that will be an extra $1,000 credited each month to your account. Don't worry at this moment because it's your current cash flow. It's helping you with the cash flow, it's helping you with the qualifications of the other properties. When in the end, let's say in 3 years, the tenant buyer succeeds in buying the property, there will be enough savings out of the added appreciations to pay for all of this, so it doesn't cut back into your profits tremendously. It gives the tenant buyer an added incentive to do the deal with you, and they're happy because you're helping them save and you are genuinely helping them give a good return, where in no other circumstances will they ever get it as a tenant anywhere from somebody a 30% or 40% or 50% return on their money. Under the ALP system, the investor buyer will use the additional rent to, in case of default, say something happens or some accident or something serious happens, and the tenant buyer is going on default because they have been paying added rent, additional rent. So under our ALP contract, we want to protect the tenant buyers. In case of default, the first thing is we deduct the funds out of the additional rent. This way, your payments don't go into default because your reserve for the additional rent goes down. Of course, the tenants lose the credit in case they default on the additional rent for that month that they are not there. They will lose that additional credit. They don't lose everything, but they lose for the period when they are in default or when they are late for the payment. They lose that additional boosted saving incentive because it pushes the tenant to pay on time. Otherwise, they will lose the bonus incentive. It so happens typically on the 3rd of each month. Let's say the rent is due on the 1st, and if the tenant does not pay by the 3rd, they will lose the boosted savings bonus. So, this pushes the tenant to pay on time. You don't have to chase the tenant because the tenant has enough incentive to lose in case they don't pay. Not only do they lose the 30% or 40% or 50% additional rent that they would receive as credit from you, but they also will have to pay the penalty in the contract for the late payment. This adds up in case they are not punctual. This pushes them to become punctual. This is normally non-existent in the normal rent-to-own agreements or these option agreements. The ALP system is way better than the other systems on the market, and it helps protect both the tenant buyer and you because the additional rent adds additional security so that the tenant buyer doesn't go into default just in case life happens. And it acts as a buffer so that in the good times they save to help them in case bad times happen, and which sometimes do happen in life. Administrative fee. Because you're helping the tenant with the rent-to-own or ALP system, there's an administrative or management fee that is added to your profit. It's roughly $250 a month. Over 36 months, it will add up to $99,000 of profit for you. This is another perfect way of getting additional income to cover your expenses and manage the property. For the sale of the property, let's say, For example, you negotiate a purchase price of $300,000 and you sell it after 3 years for $345,000. So you make a profit of $45,000, which is a very good profit just on the appreciation alone. On top of that, you will have extra added profit out of your monthly profits that you're receiving out of the rent and the additional rent that they're making to you. So that will be an additional cash flow for you. Split the difference. Let's say you bought the property for $300,000. You're selling it for $345,000. So you have a profit of $45,000, which is your fixed profit. But because we have agreed with the tenant buyer that we will do the appraisal at the end of the term when they are purchasing the property, and whatever the difference is, we'll split it between them and you as the investor. This has a few benefits for both the tenant and the buyer. We'll discuss it in the next slide.